Good morning, dear friends. Today is 19th of February. The new week has started, and we'd like to tell that the last week was flagged. At the end of last week was flagged by a rising of the United States currency. The United States dollar found a kind of interim floor, kind of support, and rebounded from the lows, 3-year lows against the basket of major currencies, 6 major currencies. I'd like to remind you about the factors of a current slump of the dollar price in this year. Some of them probably connected to the current rhetoric of the United States President administration regarding the weaker dollar policy, and the market of course is afraid of the changes here, because you know that from the times of Robert Rubin, when Robert Rubin was a Treasury Secretary of the United States with his strong dollar policy, now a kind of new Treasury Secretary Mnuchin, he, as it seems to us, has a kind of absolutely different opinion, and we see that the current United States President's administration is pursuing a kind of weaker dollar policy. Maybe not a weaker dollar policy, but sometimes they favors a kind of weaker dollar, but still sticking to the idea that longer term the strong dollar policy is in the interest of the United States nation. Anyway, the market is afraid of such kind of phenomenon. Also, the kind of budget rising of the United States budget, and from this point of view, future financial situation in the world financial markets of United States government papers. And you know that next year, 2019, because of the current tax reduction, corporate tax reduction in the United States, higher infrastructure spending planned by the President of the United States, Donald Trump, altogether not in the favor of a better situation with the United States budget. And next year the market is expected that the whole of the United States budget will rise to the level of unprecedented level of 1 trillion United States dollars. Not a good factor for the future of the United States currency, of course. Anyway, the last week we have kind of rebounded stock prices. All of these factors finally resulted in the higher dollar and the kind of correction of the United States dollar. Regarding this week, it will be very interesting how the majors will react to this kind of correction, how the majors will behave themselves during the course of the week. Probably we are a little bit premature, a little bit fast with our chasing of the long euro-dollar strategy. We bought a small, fast kind of position in the euro-dollar at 24.60. We are ready to buy, to add to our long position at 123 with the stop below, kind of short-term uptrend in the euro-dollar, which lies today at approximately 122.75. That's why we put a stop below the lows of 14th February, which was printed at 22.75. We put a stop below this level, and we're still pursuing kind of bullish trend in the euro-dollar. What I'd like to say about the euro pairs this week. We'd like to pay attention on this week economic data, which should be published in the Eurozone. First of all, the Purchasing Managers Index for the Eurozone economies should be published on Wednesday, and taking into account that it's a kind of very good indicator about the future sentiment of the Eurozone economy, the nearest future one. It will be very interesting how the market will react to the data. And another one, very important data, it will be a gross domestic product, German gross domestic product on Friday. And taking into account that market is more or less relaxed about United States good economic indicators at the moment, they should be very well tuned to the Eurozone economic data. If, for example, the Eurozone will follow the United States economy and will publish better economic indicators, for sure it will lead to their higher expectations regarding future normalization of the monetary policy from the side of European Central Bank, and for sure it will support the EURJPY as well. So we'd like to pay attention regarding this week's Eurozone data. Please follow the suit and pay attention to this kind of data. The dollar yen, which is on the uptrend at the moment, we suggest a kind of consolidation correction period. We're still ready to sell the pair on a possible rebound to the accelerated downtrend at 107.10. We will open a new shorter position around this level, ready to add to this kind of position on a possible testing of the moving average 200 hours line, which lies today around 107.90 with a stop above 108.05. You can see this kind of resistance here. Probably a mistaken kind of strategy. Anyway, we still predict the yen crosses lower from here, and from this point of view we are ready to follow the suit and to sell the dollar yen or any other yen crosses on the possible rebound. Next currency is the cable, which we are long at the moment at a psychologically important level 140. Of course, probably this day, Monday, probably the first part of it should head the cable some lower. Anyway, we suggest that sooner or later the sterling will rebound, because the underlying trend is for sure is still bullish. On Friday, you can see that we retested our short-term downtrend around 141.45.50, and the pair dropped it from this kind of level. But anyway, we still suggest this kind of drop as a kind of short-lived, and we will pursue the long strategy in the pair. The dollar Swiss still here. We are ready to sell on a possible test of the short-term downtrend around 93.40 with a very close stop above 93.75. We still suggest that the dollar Swiss has everything in its arms to go lower from here. The Australian dollar, where we still long at 0.7777, we, as you know, tightened our stop profit level to 78.90. We are ready to lock in profits on the case of dropping below this level, but we still target the possible retest of major resistance around 81.20. Here, probably the New Zealand dollar has much interesting support, because as you can see, despite of the dollar buying at the end of last week, the Kiwi dollar is still very well supported, and that means that any kind of drop in the price of the Kiwi should meet a healthy buying interest. And what's interesting here from fundamental point of view, you know that during the course of last week we had a kind of very good economic numbers from the New Zealand economy. And first of all, a kind of inflation good numbers, and that's a kind of good indicator of possible changes in the nearest monetary policy from the part of Royal Bank of New Zealand. So the next meeting of this bank probably will herald a kind of changes in the policy, and even could lead to a fast hike conducted by this bank. The dollar Canada still below its short-term downtrend at 26.40, and while below this line we still expect the pair lower from here. Regarding the Euro Yen, it's closer and closer to its lower side of the current range that started in September 2017, and also here is a moving average daily line which intersects at 130.99, and while above that line still this pair could rebound, but anyway the technical picture is not so good, and possible eroding of this moving average line could be followed by a renewed weakness in the cross. Also, we pay attention of the 200 weekly line in the Euro Yen, which lies today, excuse us for our fast kind of internet, it's at 129.66. So kind of psychological level of 130, also 131 presents a good support in the pair. But if we closed on the weekly basis below, for example, 129.66, it could probably mean that we could see lower levels, and in this case longer term strategy in the pair will be a possible drop even to this line around 120.40, which is another 10 big figures, and for sure we should follow this suit, and we should take this chance and use it. The Euro Swiss still above its kind of medium to longer term uptrend, which still lies around 114.50. That's why we are still ready to buy a possible drop to this retest of this zone, with the stop below moving average 200 daily line, which lies today at 113.97. So we are ready to buy the pair on a possible slump to 114.50 with the stop below moving average 200 daily line. Euro sterling still no changes here. We're still in the wide kind of range, not a wide but anyway a longer term kind of range between 87 and 90, and while inside of this range we still consider this pair very neutrally. And euro ruble, in 5 minutes the ruble market will open, and we decided to take away our stop loss in the euro ruble at 69.80 on a kind of a longer term strategy accumulated on Friday at 70.20. We decided to wait for a possible decline to the, from our point of view, major level of 78.95.90, where lies a longer term uptrend. And for those still not having a long position, we strongly recommend to buy a possible drop to 69.10, 69.20 with a stop, or below 68, whether below 68.90 or probably below moving average 200 line at 68.29 and a half. We wish you a very profitable and safe kind of week ahead. Take care. See you tomorrow in the morning.